Welcome back to Golden Roll Radio. It's nice to be back in here with you, Miles, because I hadn't been here in a month or so?
That sounds about right. Geez, you've been skiing. You've been getting the last few tracks of the year in.
Yeah.
7 days a week.
Skiing's about
Dave
done this year.
McElvaney's been fine with that. You just skiing every day.
Yeah.
Okay, we'll go with that. That's probably not the case. So
Definitely
no,
not.
it's definitely good to have you back. I know you had some client trips you were on and all here over the last couple weeks, and glad to have you in the studio. So what have you missed in the gold market? Because I know the only time you ever look at gold is when you're sitting in our little recording studio here. So is there anything you've missed that we need to cover today, Robert?
Well, I'm not surprised to see gold higher from last week. I think I sent you and Tori a chart of gold, silver, platinum, all of which had the same type of pattern built into the chart and it looked like it was ready for a rally. So we kind of talked amongst ourselves late last week, and sure enough, here we are. It's moving toward the target. Gold's up very strongly, nicely, as it probably should be with all that's going on. Silver the same way. Platinum's languished a little bit, but let's jump into gold first, Miles. Gold's pushing back toward 2,000 and could quite likely just head right back up above 2,000. You know, we've stair-stepped up here. 16, 17, 18, 1900, 2,000. We're getting there. And the next, I think, real ceiling would be the previous all-time high. And so if we get past that, you could see it keep running for a while.
Yeah, absolutely. I mean, short term, just looking back through, let's say, March into April, we had this really compact trading range between about 1950 or so, and then a couple little touches down in sub 1900, but really down in the low 1900s. So we kind of had this $50 range with a high point from March 24th, which we have now broken above. So completely agree. The only other thing I'm really looking for is just kind of that right shoulder going back to the beginning of March, sitting around 2010. I don't plan to see too much resistance right there. Wouldn't surprise me. Maybe a little $10, $20 drop off of that. But I think there's a very good chance we go up and push right into that previous high, 2080. Maybe we do see 2100. We've seen it twice now, and the second time we saw it, it didn't come down very far, only came down to about 1900. So it wouldn't surprise me if we do actually look at breakout territory. I really didn't think we'd be seeing a gold breakout into new territories in June of this year, but maybe we do.
Yeah, you know, the last few weeks where it chopped around right there at the former previous all-time high back in 2011-12. 1925 was where that previous all-time high was before 2 years ago, and it bettered that. So I thought it was kind of neat to note, bouncing around right there. It did definitely figure out which way it wants to go. Now it's broken out of that chopping around pattern. And 2000, obviously, psychological number, next one up right there, and then previous high. So we are bullish on gold. All that's going on in the world, all the policies that are in place, all the expectation of what the Fed's going to do, you know, it kind of just makes you feel like these policies are in place to intentionally cause some things to happen. That might be one to debate for the history books, but the policymakers, they're not idiots. So they're making these policies, and maybe they just have a different philosophy, or maybe they're intentionally doing it. We shall see.
Or maybe they're idiots.
Yeah.
It's certainly possible, though I agree with you. I don't think that's probably the case.
Probably not.
Yeah, I'm laughing over here as you say that, because that definitely is a debate we could have, although it may not be a debate, because I don't like to put the tinfoil hat on often, but I do have a tinfoil hat theory about the interest rate rises. And I've talked to a couple of my clients about. So maybe one day we'll air that out on the show. And see what we see with that. But my big question is, are we looking at Paul Volcker years, or are we looking at Greenspan years? Because they both tried to raise interest rates, but only one of them stuck with it. And that's where my tinfoil hat goes on. So looking at silver, we're seeing the exact same thing happening, like you mentioned, except silver also continues to lag a little bit behind gold. I mentioned gold pushed above that March 24th high. Silver is right at it today. A high watermark for silver, at least short term. We got to give above that $27 high from early March. But other than that, as soon as we go above that, you're probably looking at a next higher high in silver. And I can't imagine we go from 30 down to 22 again, like we've done twice.
I would agree.
You know, we've done that twice. I can't imagine it happens a third time. I think the next time we hit 30, I think we're going to 35. And finally, in the metals, looking at platinum, like Robert had mentioned, platinum is falling a little behind, languishing, so to speak, at lower pricing. Platinum did have kind of this three drives pattern ending in RSI divergence. We expected a reversal. We've seen a reversal. We put in a high just a little under 1,000, and now we're at like 987. So would like to see if gold continues up, if silver moves above that March 24th high, it's very likely you're going to see platinum continue up. Platinum has a long way to go to get anywhere near what silver has already done, let alone what gold has already done as a percentage based on their previous all-time highs. So platinum remains something I continue to be very interested in.
Jumping from the metals over to the dollar index, the dollar index did touch 100. We should all cheer.
Ooh.
Is that primarily weakness in the euro and some other currencies, euro specifically, driving the dollar index up? Does everybody out there who's listening feel like the dollar's getting stronger with the cost of things out there today?
Yeah, because when the dollar goes up, that means gas prices go up.
Yeah,
food
right.
prices,
Makes all
everything
the
goes
sense
up.
in the world.
Makes sense.
The dollar index getting stronger doesn't really translate to your pocketbook of dollars going farther. It's actually the inverse of that, as we all know. And people vote their pocketbooks a lot of the time. So this is definitely causing some issues throughout the economy. And as David McElveny and Kevin Orrick talked about this week on the McElveny Weekly Commentary, there are a lot of effects that are happening to the common guy in America because of the dollar weakness, even though the dollar index just pegged 100 for the first time in a long time.
Well, and I think you can see pretty clearly where that strength in the dollar is coming from, at least short term, when we look at the equities here in a second. From a picture standpoint, we looked at a trading range the dollar was stuck in through the beginning of 2022, which we broke out of. But it looks like we may be seeing a little bit of resistance at the top end. There's this right shoulder. Before the dollar fell off the cliff back in 2020, we had this compression zone. We started at the bottom of it. Now we're seeing a little resistance at the top of it. So we'll see if the dollar can continue its climb. But there's also some RSI divergence that shows that you may get at least a short-term reversal back down in the dollar. And why is the dollar going up? I think it's a short-term answer to liquidity concerns with potential interest rate rises, expectation of the Federal Reserve lowering the balance sheet, and a pretty abysmal equities market over the beginning of 2022. Both the transportation's leading the way to the downside, seeing significant decline, and the Dow Industrials having a very distinct channel trading down with consecutive lower highs and lower lows. The equity market looks like it's starting to roll over, very weak, and I think if the Federal Reserve, now I'm putting that tinfoil hat back on, what's the Federal Reserve saying they're going to do compared to what they are actually going to do? If the Federal Reserve does not step in here like it has done in years past, I think it's very likely we see an equities market that continues to decline in years to come.
Yeah, speaking of that, I mean, a lot of Americans have a lot of their retirement funds in the equities market and have just been kind of hoping and praying for the best. This year doesn't look like that strategy will work out. So it's almost like you want to analyze what investments you do want to have, whittle down what you don't want to have. And I rule out U.S. equities right now for me with the technicals on the chart and fundamentals. I rule out the bond market in real rate of return to be so negative. I mean, the Fed would have to really raise interest rates to turn that real rate of return positive in the bond market. So I don't want to be in bonds right now. Currencies, not backed by anything, don't want to be in currencies. Real estate, fairly high. Can it go higher? Sure, but with interest rates going up, your mortgage rate's gone from 3% to like 4.5%, almost 5%. That's going to affect the affordability of homes for buyers. And so I'm not really all that interested in real estate unless it's select niche real estate. What are you left with? You're left with commodities. That's what we're talking about here, real things. And our country is going to start holding hands again and singing Kumbaya together and sharing commodities? Or are we going to have a commodities-driven cycle for the next 10, 20 years where countries just hoard commodities? And I think that's where gold is going to be in a long-term bull market here. It already is in a long-term bull market, I should say. I think that's where it continues to go higher, even with them raising interest rates, Fed shrinking balance sheet. You've got a lot in play that is positive for gold. So we encourage you to be adding to your positions. We can talk to you specifically about your portfolio if you want to call us at 800-525-3776. 9556. Follow us on Facebook, McElvenney Financial. Like us on Twitter, ICA Gold. Hit the subscribe button below, and have a great week.